If you have followed me for very long, you know that earnings is one of my favorite things to trade. I trade earnings as often as possible. As a matter of fact, it's one of my most profitable trading strategies, and it's one of my most frequent trading strategies that I take as well. So today, what I want to do is I want to give you the secret sauce to how exactly I go about trading earnings. Before we dive in, make sure you take a second and read this disclaimer. Pause the video or whatever you need to do that. And let's jump in. So the first question I want to answer is this: why should we trade earnings to begin with? Why would I be interested in trading earnings? And to answer this question, we need to answer two other questions, okay? The first one is this: what moves stock prices? Well, at the end of the day, supply and demand is what moves markets. If there is a lot of supply and not a lot of demand, then prices tend to stay low because the market is flooded with something and not a lot of people want it. And when you have the opposite happen, when you have a lot of demand and you have low supply, you have everything that you need for stocks to move up. That is an ideal scenario for a bullish trade. High demand, low supply. Supply and demand is what moves stocks. What causes demand for a stock to go up? Well, the number one thing that causes demand for a stock to go up is a catalyst. A catalyst could be something like news. For example, when war breaks out somewhere, the market tends to sell. Why? Well, that is a catalyst that causes a supply issue where there's a lot of supply and not a lot of demand because people are scared. Well, when a company receives good news of some sort, that is a good catalyst, and that tends to cause demand for a stock, which in turn causes the price of a stock to go up. So why should you consider trading earnings, and why is earnings one of my favorite things to trade? Well, the simple answer is because earnings are both a major and a predictable catalyst. You see, every quarter, companies are required by law in the stock market to let you know how they did, how much money they made, and just kind of provide financial updates on their company. So they're this predictable, regular thing. You can bank on the fact that most companies are going to have this catalyst come around once a quarter. And so a lot of traders, myself included, make a substantial amount of money by just trading earnings because it's a predictable catalyst for them. And there's enough earnings announcements each quarter to make a good living off of. They're also a major catalyst because a lot of people are watching them. So hedge funds watch these, banks watch these earnings, and then they determine if they're going to buy or sell based on the earnings releases. So you have a major and a predictable catalyst that comes around all the time, making earnings a beautiful way to trade. So let's talk for a minute about how most people approach earnings. If you spend much time on social media, or you spend much time following traders on different places like Reddit or whatever, you're going to see that most people approach earnings like a gamble. They talk a lot about, I've got a feeling. I've got a feeling that this price is going to go up. I have a feeling that earnings are going to go well. And they're very feelings and intuition based, which is gambling, right? Another thing that you'll see people post things like, I'm taking a lotto. Well, even the word lotto implies gambling. It's like, I am risking what I'm willing to lose 100% of on this trade. They're guessing as to how earnings are going to go. And then many of them have an all or nothing approach. Their approach to trading earnings typically is to grab a few shares of something or a few options contracts that they're willing to lose everything on, and then hope that they get like a 1 or 200% runner, which is a terrible, terrible way to approach earnings. And when you trade earnings with this approach, let me tell you what you do. One, you typically have to take such a small position size that you're limiting your potential gains. And so let's say earnings are incredible. Well, since you gambled, you didn't take a very large size if you were smart, and therefore your potential gains are very limited as well. Another problem with this is that you could be right on your guess. You could be right on your intuition, and yet the market, as soon as earnings is released, tends to go up and down and have these very large moves, and you can actually kill a really good trade just by the overreactions in both directions. Your stop loss can get hit and all of that kind of stuff. Even if you would have just hung around, you could have made money. And so overreactions can kill an otherwise good trade. If you're trading with options on earnings, you have theta decay to worry about. There have been many times that I've known traders that they get into a trade using options, they'll buy a call or something for the next day, based on just kind of a hope that like their call runs 2, 3, 400%, and they might even be right. The stock price might even go up, but because of the Greeks and because of the theta that is burning against them on that trade, they can actually be right and still lose money the next day because of trading options. The other problem with this is you're having to deal a lot of times with after hour and pre-market trading. And the issues with after hours and pre-market trading is that there's not a lot of volume in the after hours. There's not a lot of volume in the pre-market. And so therefore you can't do things like market orders. Liquidity isn't always there to get out of a trade as fast or as easily as you want to. And sometimes while you're putting in how much you want to spend, how many shares you want to buy and stuff like that, the price can fluctuate so much because of the lack of volume and because of the rules and restrictions of trading in the after hours or the pre-market. What if there's a better way? That's what I want to teach you today. I want to teach you a strategy that's proven, a strategy that I use all of the time to make really good money trading earnings. Okay? So let me give you some principles for trading earnings. First, when it comes to the way I trade earnings, I'm more interested in the real reaction than the initial reaction. And here's what I mean by that. A lot of times what will happen is you'll get an initial reaction from the earnings release. And it's not always the correct direction. Many times you will have like kind of some initial selling on good news because people are profit taking into that. So you'll have some initial selling on good news, and it's just an initial reaction and it's not the real reaction to the trade. Let me give you an example of this. Recently, Delta Airlines, they released their earnings, and you can see this huge selling candle that happened right here. This is in the pre-market. And then you can see that price kind of bottomed out and fluctuated here. This was the initial reaction, but you can see that the next day we ended up having a trend day up the next day, which is the real reaction to the price move. And so the first thing I would say is I always wait until about 15 minutes after the market has opened before I even consider getting into an earnings trade. And the reason that is because I want to just, if you look at the bottom here, you've got volume bars on the screen. And down here, you can see the volume is very, very low. Even with some big selling, it's very, very low in the pre-market. And this is consistent every single day. The pre-market and the after hours just don't have the volume of market hours. So you're not actually going to get the real reaction to the news until you see volume. And so I always wait for the market to open, and I give it about 15 minutes to let the volume rush in and set the important levels of the day. That is what I am concerned with. I want to know the real reaction with volume behind it, and you're not going to see that until the market is open. And so for me, if an earnings announcement happens in the pre-market, what I'm doing is I am going to wait until the market opens, and then I'm going to make my decisions based on that. And then what I'm going to do if earnings is announced in the after hours, like at the end of the day, I'm actually going to sit out and I'm going to wait until the next day, and market hours the next day. So I'm going to wait until the next market hours at all times to wait and see what happens. So for me, in the pre-market, I'm trading the same day once market opens. In the after hours, I'm trading the next day. Okay, here's the second principle. My goal with an earnings trade is to ride the trend early and ride it for as long as I can. So because you have a catalyst, your likelihood of a potential trend day in the market goes up. Trend days are what I love to trade because real good money is made, not on, catching a few scalps, but real good money is made on catching an entire day of gains. A trend day is described as when the market opens low and closes high and just kind of goes up all day. Those are what I want to trade. I would rather catch a trend day any day than have a small gain or a loss. I would rather have a trade break even than miss a trend day. Like, trend days are important to me and they're important to my trading strategies. So a trend day is going to start low and it's going to end high. So let's talk about how I find the best earnings plays. I'm going to give you the secret sauce behind this. Okay, I'm looking at 3 things when I'm determining, is this a good earnings play for me. The first thing I'm looking at is I'm looking at the implied volatility of the options. So the options are going to give you a hint. They're going to give you a guess as to how the market makers think reactions to the earnings are going to go. So you're going to be looking at the implied volatility percent. Now, this is information that is available with enough research. I subscribe to a service that puts all of this information in one place for me to save me time, because time is money. And so I've got a link to that in the kind of under this video, that if you want to, like, if you're interested in trading earnings and you want to use this strategy yourself and kind of have all the information in one place, that's the best place to do it. But I'm looking first off at the implied volatility of options. Let me give you an example of this from the software that I use. So you can kind of choose on here. This is Earnings Watcher is the name of the software. And you can kind of choose on here to do it by day or by week. But the thing that I'm looking at the most is over here. It's this implied move. It shows you that the implied move is a 7% move on the stock price, a 3% move on the stock price, an 8% move on the stock price. I want something that has a large implied move because I want to make money. Now, this doesn't tell you the direction of the move. This just tells you the size of the implied move. And so this isn't enough information to just say, I'm going to get into the trade, but it is enough information to say, these are the specific plays on the specific days that I'm interested in. The other things I'm looking at is I'm looking at the average move. On average, how much does this stock move with earnings? And I'm looking at the average length of the move. In other words, how long does the momentum to the upside or the downside typically last? And when all three of those things line up, you have kind of the trifecta or the holy trinity of a great earnings play. So again, on this specific software that I use, it puts it right here for you, Top Stocks by Strategy. I can just click on the word runners and it'll show you the average earnings move in that column here, and it'll show you the average momentum duration. How long does the momentum tend to continue behind the move? And once all of those three things are lined up, that's how I choose exactly what I'm going to trade. So now let's talk for a minute about what indicators are on my chart in the trade. Well, I'm using a 15-minute chart when I'm trading. I have the 5-period simple moving average on my chart. I like to just have that on there at all times. You could also use the Trash Panda trailing stop indicator if you're a part of the pro community. That's even better than the 5-period simple moving average. I have the 200 exponential moving average on my chart because that's an important level to watch for, specifically for like potential support or resistance levels on the chart. And then I have key support and resistance level on the chart. For me, that's primarily pivot points, which is an indicator in Thinkorswim. You can also use pre-market high-low, previous day high-low, psychological levels, things like round numbers like 50-cent marks, dollar marks, stuff like that. But the point is, I want potential support and resistance levels on my chart so that I know where I should take profit, where I might meet some trouble breaking through the price levels, and all of that kind of stuff. Okay. And then what I'm going to do is I'm going to actually mark the high and low of the first 15 minutes of the day on my chart. I'm going to mark the high of the first 15 minutes and the low of the first 15 minutes. So let's talk about the entry. An entry on this setup is going to be a break of the opening 15-minute range. So I've got my high and my low of the first 15 minutes, the opening range, marked. So now if price breaks above that 15-minute high, the first 15-minute high, that's my entry level. So an easy way to do this would be to set like a buy stop limit order for like a penny above. And if that gets filled, then you're in the trade. If it doesn't, then it just traded sideways all day, or it continued selling off and you don't have to worry about it. What I'm looking for, though, is I'm looking at a break of the opening 15-minute range. I also want to talk about position size for a second. I want to remind you that individual stocks carry more risks than something like a diversified ETF. And so you have to trade accordingly, and you have to size based on your downside risk. So whatever your potential downside is, you want to make sure that that is a tolerable loss for me. So for me, a tolerable loss on a trade is not more than 1% of my account. And so therefore, I want to make sure that I'm not risking more than 1% of my account. And so my position size is going to be based on how large that candle is. What's the potential downside? Let's talk about profit taking. So the first third of shares, I'm going to sell at the first resistance level. That could be the 200 exponential moving average. That could be a pivot point, a pre-market high low, a psychological level, but I'm going to sell there. Then I'm going to raise my stop to my original entry. So once I hit that first resistance level and I take profit, now I have no more risk on this trade that is going to turn red, and I'm just going to wait. Then what I'm going to do is I'm going to sell a third at the next resistance level on the way up, and I'm going to raise my stop to just below my first profit level, and I'm going to allow, usually what I'm going to do is I'm going to allow my Trash Panda trailing stop indicator to take over at that point, that kind of second resistance level, and just kind of keeping it from getting to the below my entry level at minimum. Or what you can do is you can actually have the 5 SMA on your screen, and you can use that. A close below the 5 SMA could be your signal to get out. And then what I'm going to do is I'm going to leave a third to ride the rest of the day. And obviously I'm going to be out by the end of the day, but if I don't get a sell signal based on my trailing stop indicator or based on the 5 simple moving average, I'm going to just stay in, and I'm going to hope that's a trend day, and I'm going to try to catch that for as long as I can. Let's talk for a minute about stop losses. So your initial stop loss is going to be a close below the opening range on the 5-minute chart. So a 5-minute close below the opening range is your sign to get out. And then beyond that, I'm going to just trail my stop behind the profit-taking areas. Let me give you a couple of examples of what this trade looks like. All right, so here we go. Recently, NIO had their earnings, and you can see that initially when they had their earnings, it was a big sell. Again, this likes to happen. This is the initial reaction that I don't trade. Once the market opened, you can see that this 15-minute candle right here is the opening range. So I'm going to mark the high here of 444 and the low here of 431. Those are kind of like the levels that I am watching from this point on. So I'm going to go ahead and mark these levels here, 441 and 431. That's my range. So you can see that within just a few minutes after that trade, we broke out of that range. So if I have a buy stop limit order at 445, that's my entry. So my initial stop is going to be a 5-minute close below 431. So I'm sizing based on my risk. And now I wait. Well, you can see that we came up here and we hit this first pivot point right here at 449. So there's my first profit taking area. Then we continued on up and we hit the second profit taking area at $4.66. Now my trade is fully risk free, and my stop is going to be this trailing stop indicator, which continued to climb up, and we get a close below the trailing stop indicator here at 9:15 at 457, which is still 13 cents on a $4 stock above my entry price, which is an incredibly, incredibly profitable trade. Let me give you another example of this on NU over here. You can see they had earnings as well. They had just a big candle at the end of the day, the previous day. So I'm waiting until the next day to see the real reaction. It sold a lot in the pre-market. There's a lot of uncertainty there. Well, let's draw our levels after the first 15 minutes. You got here 1451 is the high. You've got the low here of 14. That's my level for the day. You can see that in the next 5-minute candle, we broke it. And then we were not able to actually close above it or anything like that, but we broke it. So I'm continuing to hold that break of the pre-market level. And you can see that price chopped sideways. It came all the way down almost to the stop loss, but never broke it or closed a 5-minute candle below it. And it actually continued climbing right back up, broke up through, and actually climbed all the way up. And this was something I was able to actually sell at the very end of the day. So $15.19 was the closing price. You got in here at the break of $14.52. So another incredible, incredible trade with a little bit of patience. Very easy to work out. So my initial stop loss is going to be here. After I take profit, I'm going to raise my stop loss to my entry to make sure that that trade doesn't turn red on me. And then from there, I am watching. Once we get above the trailing stop indicator, I'm watching for a close below that or the end of the day, whichever one happens first. Hopefully this video was helpful for you. If you've got any questions, don't hesitate to reach out. Earnings is one of my favorite things to trade. It's predictable, it doesn't have to be intimidating, and it doesn't have to be a gamble. Hey traders, if you've enjoyed this video and you found it helpful, then I've got something special for you. Imagine taking your trading skills to the next level with a comprehensive course designed to help you get consistently profitable on any time frame, regardless of your availability. By joining the Legacy Profits Club Pro community, you're going to gain access to an extensive course that covers everything that you need to know to succeed in trading. On top of that, you're going to get daily trade ideas. You're going to get personalized feedback on your own trading, and you get to be a part of a thriving community of like-minded traders who are some of the best traders on the planet. But that's not all. We also have live Q&A sessions and live trading sessions and regular workshops to help you continue to grow. And you can ask questions. You can see our strategies put into action on a regular basis. It is the perfect environment to grow and refine your own trading skills. So if you're ready to elevate your trading game, click the link in the description below to join the Legacy Profits Club Pro community. Let's achieve those trading goals together.